All right, it's W from W Investing. Double the letter U Investing. Go ahead and Google W Investing if you want more information. But it's W here making the weekly stock market predictions for the week starting April 23rd, 2012. And we're at a very interesting time in the stock market. I pulled up the S&P 500 chart with a 50-day moving average and a 20-day moving average. The 20-day is the green one. The 50-day is the blue one. As you've seen, we've been bouncing around the 50-day moving average for quite some time, but notice that the 20-day moving average has rolled over and we're right in the middle of it. Every time the S&P 500 touches the 20-day, it bounces right back down to the 50-day over the last few weeks, or over the last few days rather. So this week, we're going to have to get some conviction one way or the other. Either we're going to start heading lower down here to the 200-day moving average, or we're going to get a bounce off the 50-day and probably make new yearly highs. Now, which way we go, no one really knows. Making predictions, I would think the market's still in good shape, but any little thing could spook some investors and send us lower. Even if we do drop down here in the 1350 range, it doesn't mean we'll go all the way down to 1273. But as you can see, we have not tested the 200-day moving average in the year of 2012. If we get a bounce above this 20-day moving average, I would expect to see a big day in the near future. I'm talking, up 20 or 30 points for the S&P because there's been some consolidation in here. But, if it drops below this level, we could also see a big down day. Looking at some of the market leaders over the last few months, I'm still positive on a lot of Tractor Supply Company is well above its moving averages. Even during this consolidation period, it's been streaming higher. Stocks like Ulta. Let's see what Ulta did for me. Seeing this stock at this point makes me feel good about the overall market. Another company that's done pretty well in 2012 is Lululemon. Lulu has dropped below its 20-day moving average, but still hasn't tested its 50-day. This one doesn't look as good as some of the other names. Let's look at AutoZone. AutoZone, its 20-day moving average, hasn't even tested the 50. As far as bigger names, Apple, I've said it for quite some time. I don't know if Apple's got a lot of room to run anymore. I think the iPad 3 wasn't really revolutionary. I don't know what the iPhone 5 can do that the Android phones cannot do. That's just my opinion. It may go to $1,000 a share in the next 3 months for all I know, but I'm just not as positive on Apple, and you can see why. A lot of red here, a lot of red in volume, all the way down to its 50-day. If Apple drops below its 50-day moving average and a lot of volume, that could swing the market. If we take a look at the NASDAQ, which I typed it in wrong, 1Q in COMPQ for the NASDAQ on stock charts. But if you take a look at the NASDAQ, it's doing the same thing as the S&P 500. We're consolidating here between the 50-day and the 20-day moving averages. So honestly, I'm not willing to make a prediction until we get some type of conviction off of this 3,000 level. 3,000 is a psychological barrier. If we drop below it, it might be a few months before we can break above it. But we have been above it, so it may serve as a level of support. So please like the video if you like it, and check out W Investing for my other stock picks and some stock analysis.